Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 9 minutes till 9 a.m. Eastern Time on the last day of Q3. Can you believe it? September is over after today. So, as we look back at yesterday's action, right, the VIX uh, did not uh, get out of the previous day's range, right? It was still within Friday's range uh, and just, you know, status quo is what we got here. Uh, Looking at the Qs, right, that 600 was the call wall. Uh, and we got a little bit above it up to, hold between 601 and 602, and then just kind of went right back under it. Not a lot, just on to 598. We touched that 597 half. That split between, right, those halfway points between their always potentially reflective areas as you know the bias shifts between which one are we closer to now. uh, so as we look at the SPY too, the SPY had a large gamma yesterday at 662 and just kind of trickled down into it, and then couldn't get anything under it, and just uh, visually, right? That was where we were struggling with the high on Friday, right? So, there was a lot of trap shorts under there, and that just kept that pressure going up on it. On the cash, right? That 6650 was, close to that area as well. uh, Looking at the title of my videos, just be aware of the news flow every day. Kind of sometimes we get a little complacent. There's not a lot of news on today, right? We have non-farm payroll at the end of the week, but non-farm payroll has been more of a day trade shift than a trending day for a long time. It doesn't mean that this Friday might not be a trending day, but normally it's just a repricing and just a hold in a range. And we'll see if that sets up again Friday. So not a lot technically. JOLTS is something that can move the market if it's an outlier. It hasn't moved the market substantially, probably in about 14 months, I think. And then President Trump is speaking at 11. I'm not sure what the main topic is supposed to be, if it's Israel or the government shutdown. But I'm sure he'll broach both topics for sure. As you know, that's he'll just go through the repertoire of what's current in the news, I'm sure, while he's on the mic. And then after that, there's really not a lot. So the market could be a little bit waiting. Again, with the government shutdown, as long as there's not a debt payment or an interest payment, things could get a little wonky. Uh, but nothing's gonna, there's not going to be any major catastrophe. It doesn't mean that we can't get a 200-point pullback in the ES, sometime before this is over. Uh, Mainly just because we're due for it, not because of the, anything that's going on in the government. Uh, Looking at where we're at, and my first bias point today is going to be, can we hold above this 66.95? That was Friday's point of control, and it was at the top end of the session, right? Yesterday's low of the day was 66.96 quarter, so 5 ticks above that point of control. And then in the overnight, basically, we traded 3 ticks under it and just, no fanfare. So basically between 66.95 and 67, let's call it 15, that 20-point range, there's not a lot going on. Uh, just, waiting on the to see what happens. So bigger picture, right? Top of the range is still right around on the futures, 67.50. Bottom of the range is right around 66, 63 ish. And then as we look at the overnight, right, we've everyone except for the Dow has traded below yesterday's bell low in the overnight session, and you can see with the NQ, right, there's some single prints uh, down here that are right between 24 760 to uh, 24,775 basically, so that uh, 18-point range right there that it is. Those are what you're looking to see if they hold or not. So think about it as an auction above that area and an auction below that area. So basically, from the bottom of the box up uh, and above is one auction. From the top of the box down is another auction. So the box itself is a little bit of a no man's land, if you ask me. We did have a clear split in the distribution for the ES yesterday at 67.16, and the overnight high really has not been able to muster anything above there to this point in time. So we'll see if that continues to be something. Yesterday's point of control again, 67.14 quarter, just slightly above unchanged. And then for the NQ, it's basically right on unchanged. And then as we look at positioning, today is the end of the quarter, right? So again, that JPM hedge product at 10% left last quarter, right? They just took redemption, said, I'm out of here. I'm losing my ass because the market's going up more than this hedge has protected me to the downside. And I'm not participating in the upside fully, right? That doesn't mean that that's going to keep going forever, but when we closed today, the cash market closed yesterday at 66.61. Um, there is no participation in those people in that product above 65.05, right? They are just screwed. They get nothing and they don't like it probably. Uh, but so we're gonna roll today, sometime this afternoon, usually around 220 to 240 will be the initial roll, and then they'll make a final adjustment, right around right before the options market closes in that last 5 minutes. Sometimes they wait till the last frickin' minute to do it. You shouldn't be trading at that point in time, but there'll be a final adjustment for their you know end of year hedge that they're going to put on. So that will make the market jump a little bit for no reason at all, and probably get a mean reversion as well right around there. But that's nothing you should be playing for. But if you see a big jump in there, if you're watching this afternoon, I usually don't do anything from 2 o'clock on the quarterlies, just because it gets a little wonky, and it can be less technical. It doesn't mean that it will be, but there's my 2 cent warning to you guys. Really, just try to be done before 2 o'clock today at the very latest. If you can be done earlier, as a day trader, it's always better. So looking at the rest of it, uh, 6,500 is basically where we're at for the put wall, even in the long term, and the call wall is up at 6,700. And if we look at for today, right, you've got 6,500 and 6,505. The market would really have to collapse to get down there. I don't know if we're getting a 150 point drop today. I wouldn't count on it. But you can always scroll down to the bottom of the sheet to get the sum of all the near term options that I'm looking at on the sheet. And then that's where you get the bigger position. So this will fall off tomorrow, the 65.05. And then we'll go from there. So I think I beat up the cash market to death. Looking at the SPY, we closed yesterday uh, right at 663, 664, right around in that range. So right in the middle of this funk between 660 and 665. And you can see there's just a little bit of action up here. On any major weakness, right, you're looking at 655 would be a magnet. And if that doesn't hold, 650 would be it. And again, that would be a huge collapse from where we are right now. I'm not looking for that to happen. On the upside, if we get some really good news, or the market's flying up, 670 is still the end. Uh, so we are about 80 points. As I talk right now, we're at trading 663, so around 70 points off from this call wall. But we'll probably just mainly status quo day, right, is still going to be between 662 to 665. We might, test outside of that 667, 668. Again, could be a little bit of a pull if we get something positive. Looking at the Qs in the same way, you can see there's little bit more action on the Qs today. The Qs are currently trading uh, 598.50 after closing at 598.73, so basically unchanged right now. And you can see between 595 and 600, that's still where you're at. And as we look down at the bottom right where all the positions are, you can still see 600 is that call wall that we're looking at, and 580 uh, was the put wall, but now we've moved down to 560. But you can still see it would take a lot to chew through 580 as for the put wall. So looking at where we're at, there's a big, uh, large gamma at 588 and at 590 again. We're trading up here around 590, 8.5 right now. So right now, status quo until we get, a little bit more going is 595 to 600. But you can still see that there is room to get up to 603 and potentially 605. If the VIX can end up getting below the 2-day range that it's set, right, and hold below yesterday's low and Friday's low is what you'd want to see to get up there. Otherwise, it's probably not going to make much traction over 600. And then on weakness, you could kind of get a slide down to 593 half probably, and then have to see it take a little bit more conviction. But 590 is going to be your draw. And I think for today, on serious weakness, 588 would be your floor. Uh, you know, if you're just uh, in a negative feedback loop that's very strong into the close, you could see 585, but I wouldn't hold your breath for that. It'll probably be another go nowhere, do nothing day with maybe a couple false starts one way or the other. And then tomorrow, after we get this quarterly expiration behind us, I think you have a better chance for a little bit of a poor structure day, a little bit of a trending day, and then we'll see, how that holds into non-farm payroll. I hope this helps. We'll see what Jack's looking at next.